Been a very tough run for Target, vastly underperforming the other big box competitors. Concerns about sales trends all year. Earnings estimates have been cut pretty severely. What are you expecting to hear? What would you hope to see from Target today?
So I don't think the earnings in this quarter are going to be the reason you want to necessarily own Target. I'll tell you why you do, but I'll just say you're probably going to see earnings, down about 4.5% year over year. There are a lot of headwinds, and the other guests will probably talk about that, I would guess. But the big thing about Target is about 50% of their spending comes from discretionary spending. That's significantly higher than, say, a Walmart. So they're kind of in the crosshairs of what's going on with the consumer. I'd also say I think the consumers moved out, during the inventory crunch post-pandemic. You had a lot more holiday spending move into October. That I think has been pushed out. And also consumers are more looking for promotions, which again hurts profits. So, all that sounds pretty grim for being a shareholder, but I think you have to think about Target in terms of the longer term. So valuation significantly cheaper than, say, a Walmart. In fact, historically has a very wide spread relative to history. The second part is the positioning. What I gave you is kind of bad news around the 50% in discretionary spend is good news if the economy turns out to be better than many people expect. And that's why I think when you looked at how well Target traded yesterday, I think a lot of that is, again, why did the market trade well yesterday? Well, it's because all of a sudden people thought, well, there's even better chance that we have a soft landing. And so I think that's the real big part of the story. The future is the story on Target, not today's earnings.
Target during the COVID lockdown and then even beyond that, the stock doubled. It was given a lot of credit for really making a lot of progress on the omni-channel initiatives, essentially, allowing people to pick up in store. The stock has lost the entire gain from that period, sort of done this round trip. Is it still, was the market wrong to basically say that Target had a better model and that in fact that could sustain it strategically for some time to come?
No, I mean, I think they made a lot of progress. That omnichannel is still a good thing. I just think it clearly doesn't deserve the multiple of, say, a Walmart, I don't believe. But again, it's a relative in terms of does it deserve better than what it's getting today? And we'd argue, yes, it does. It's a brand people like to shop at. That's a value. There's still, I'd say retailing in general, as very difficult. You're going up against, the real tough ones, which is Walmart and Amazon. Target has a lot that's in the sights of Amazon, but they've done a good job. They've got the Ulta partnership. That's actually, if you focus on one thing that's going very well within Target, it would be the beauty side of things that's continued to do well while all this other discretionary has had a tougher run.
And just quickly, do you think Target ought to try and change the mix to more, kind of everyday non-discretionary grocery type things?
I mean, that's a tough call because, again, you're going up against, there's some benefit to being at least slightly different from Walmart. Mm-hmm. They're a monster to compete against. So, there is that, the nice part about Target with having some of their own brands and things that people come in to spend for. And you get the leverage on the way up while the economy is doing well. So I'm not so sure that's the solution either.